The US Federal Reserve has finally kicked off its much anticipated rate cutting cycle after a 4-year pause. But they didn't just start easing, they delivered a bigger surprise than the market was anticipating, slashing rates by 50 basis points instead of the predicted 25. Yet, the market remains unconvinced. Now, despite hitting record highs in the early hours of trade, both the Nifty and Sensex quickly lost steam, trading flat for the majority of the day. A slight pullback in the final hour did help, both indices close about 0.3% higher, but with both indices finishing near the day's low and a negative advance decline ratio, it's clear the tug of war between bulls and bears, it's far from over. So what's causing this market hesitation, and could the RBI follow in the footsteps of the Fed with its own rate cuts? To break it all down, we have Amar Deo Singh, Senior Vice President of Research at Angel One, joining us. Amar, thank you for giving us time here on News 9. The US Federal Reserve, finally, it has started cutting interest rates, but despite the larger than expected cut, the Indian stock market doesn't seem too impressed. Why is that the case?
So if you look at the markets, we have to understand that markets works in mysterious ways or behaves in mysterious ways many a times. And also, first of all, markets were expecting a 25 basis point. Then there were certain, I would say, views which that it could extend to 50 basis points. So now when a 50 basis point cut has happened the first time since March 2020, almost 4 years later, there are again questions being asked as to if the US economy is in such a good shape, then what was the need for such an outsized rate cut? So that is now the question which is being talked about on Wall Street as well as elsewhere. As to this 50 basis points, does it mean that there's more to the US economy which is not expected to do well or not doing that well? So I think that's one thing which has getted off, and also the carry trade. If you look at the carry trade, that also would get impacted because of this, because if the rate cut is there, so that could impact. So there's some combination of that as well. But I would say also when we find that when a major event has happened, markets generally tend to discount it prior, and there's a lot of profit booking happens once the event has taken place. I think that's also one of the things that can be seen in the markets right now.
Alright, listening to Fed Chair Jerome Powell, everything seems to be fine. Inflation is moving towards their 2% target, and although the labor market has cooled off, the situation isn't dire enough to cause panic. But do you think that he's downplaying the entire situation and the risks involved, and the rising probability of a hard landing is what pushed the Fed to cut rates by 50 basis points?
If you look at the history of the US Fed cutting rates, it's always been slow. 8 out of 10 times it has never been on time. So it's always been a slow a process which has started late. So again, we'll have to see whether this time it's the case or not. That's one. Secondly, if you look at the US jobs data, that really hasn't been very encouraging. So I think that's one of the major reasons why, because somewhere or the other, the US Fed has to balance between inflation and also the jobs, so job creation. So I think that's where the US Federal Reserve is really gunning for, as to how to ensure that the US economy continues to remain afloat, continues to grow decent, because the US economy is still almost 25-26% of the world GDP. So it's a major player, and any slowdown there or any signs of recession, there would have an impact across the board, across countries. And also we need to understand is that the second largest economy, China, again is in serious trouble themselves, where we are seeing a lot of sell-off happening in the markets as well. So I think that's where the US Fed is actually trying to step in and ensure that things don't go bad. They are under control, and maybe they could pull back from here.
All right. Moving back to Indian markets, IT stocks have taken a beating in the last couple of days. Now, one would assume that the rate cut would probably lead to more spending from their clients in the US, giving a boost to their earnings. So what gives?
You are right that a rate cut in the US of 50 basis points would have a positive impact on companies in terms of their interest outflow. So that is there. But as I said, that any piece of data, always you've got different perspective.
Hmm.
So there are also thoughts that if there is a 50 basis point, is there more that meets the eye?
Hmm.
So could it mean that there could be slowdown in terms of the spending by the US corporates? Because on one
Hmm.
hand, the cut in rates would give a boost to the earnings in the sense that the interest outflow which would happen that would to a certain extent come down. But again, if a 50 basis point is what it is, then is it everything okay or is everything okay with the US economy? That's the other concern, which I would say
Hmm.
investors would somewhere or the other feel. I think, and also if you look at the IT stocks, they've got a decent run. Many of the stocks, the likes of I would say heavyweights like Infosys, TCS, they've had some very decent runs over the last few quarters. And apart from that, Persistent and other stocks, they've also performed exceedingly well, Tech Mahindra and all that. So somewhere or the other, there has to be some profit booking which is to come, and I think that's healthy for the markets because just like trees don't grow to the sky, so that markets also they at times they breathe and they stop and consolidate.
Now, rate cuts in the US typically lead to a weaker dollar, which could negatively impact the dollar revenue of IT companies. Could that be the reason for their decline?
RBI has been managing the rupee quite well, so we'll have to watch out where it really stabilizes because currently it's stabilized between 83.50, 84.50. So it's a very narrow range for the rupee. So
Hmm.
we'll have to watch out for yes how the rupee behaves against the dollar because that's one, and so that could have an impact. How much it would have, we'll have to watch out for because if any uh, strengthening is seen. But again, a rate cut in the US Fed could also mean going forward a rate cut in other countries as well.
Hmm.
So other central banks could also follow suit. So I would say it's more of a wait and watch as to how this really plays out because that is something which the markets and investors would very closely watch out as to how the next few weeks span out post the
Hmm.
rate cut.
Alright, speaking of other central banks taking the cue, RBI's policy meet is in just a few weeks from now. Do you think Das and team will finally start cutting rates from October?
I would say, given that the India's inflation is well under control, and
Hmm.
RBI also seems to be comfortable, and they've also stated to the fact that they are definitely fine, and they would be still looking at ways and means to bring it down. And at the same time, monsoon also being good, price rise in terms of edibles, that's something which should be on a lighter side.
Hmm.
So these factors could lead to a rate cut by the RBI. We'll have to watch out for whether when it happens. Does it happen this year or maybe it spills over to the next year beginning? We'll have to watch out for. But yes, because the US Fed has started, so they're not. I don't think they're going to just stop with one rate cut. We could
Hmm.
have a couple of rate cuts more in this calendar year itself. So maybe that would also could put some pressure on central banks across the globe, including RBI, to bring interest rates down. But that again is a factor of the inflation, how inflation plays out, because crude oil definitely has helped because crude oil prices coming off has been a good sign for the overall markets in general.
Hmm.
But it would be country specific and central bank specific. But RBI has a possibility of a rate cut provided the inflation figures really don't again see a bump up going forward.
Okay, so can we expect a rate cut in October? Do you think they will wait for some time more because you speak of inflation, but energy prices have come down, food inflation, though it remains elevated. But again, looking at food and energy prices, they are beyond central bank's control. Shouldn't they focus more on core inflation instead, which has been easing and seems to be on a downward trend, making a stronger case for a rate cut?
Um, Definitely they need to have they have to keep a close watch on all things.
Hmm.
The core inflation is one side. You also look at the energy prices because ultimately it's a combination of all factors which really brings it up. So they can't let go one part and look at only the other thing. So having said that, RBI also would be under pressure and central banks would be under pressure to look at their interest rates in their respective countries because a rate cut in the US could warrant a rate cut elsewhere. So, yeah, it
Hmm.
could be a 50-50 chance of a rate cut, but maybe during the next meeting, there could be a high possibility. So, we'll have to wait and watch.